Eddie's Crypto Sniper, and following on from my BTC, which way does she go assessment. There was something else I wanted to mention that I didn't do. So here is part 2, minus the jacket this time. Yes, so this is the altcoin market cap, something that feeds into this, and it might just give a different look into the discussion, as in which way does the crypto market cap, market coins all go in terms of market cap? Are we going up? This is altcoin. This excludes Bitcoin. Everything else excluding Bitcoin. By the way, for those of you that ask, where do we get this? This is an exceedingly useful chart that you should be watching, and you can do the total market cap, which I advise as well. And the one I'm going to focus on, and I do the total market cap and everything for my premium guys, but the one I'm just going to focus on Freeview today is the altcoin, because it's a kind of a part 2 to that which I've just done on Bitcoin. So the alts, let's talk about them. So first of all, it's actually a very critical level that was reached when Ethereum was kind of tapping out at 169. That literally, for the alt market cap, and all of them were being punished, that literally was the funnel level of one of the biggest structural across the board altcoin mega pumps that has probably ever occurred in percentage terms, or certainly in aggregate market cap gain terms. Maybe not in percentage terms. I'm guesstimating if I say that. I'm not accurate. I haven't checked that fact, so I take it back. But certainly in market gain terms, when essentially you went from around 73 billion to what ended up topping out at about 550 billion. So I think I can say with a reasonable amount of confidence that that was one hell of a move. So you're talking about, if we just go to the point at which it broke here in November, you're talking about at that juncture going from 73 to 550. Wow, I mean that is 7 times. It's even more than 7 times, 7.5x. Again, in the altcoin market cap. There was also a lot of new coins coming in. So it doesn't mean that every coin was going up 7.5 times, but it was the flock was growing. Many new little lambs were joining the flock, as well as the existing lambs fattening up. So the overall, weight was going. By the way, this is a logarithmic chart. That's why, in essence, you may not be feeling that. If just to re-give context on all of that, if I take the log scale off, that might just give you a better feel for what I'm saying in terms of what a huge, huge altcoin market cap explosion this was. So 70, essentially bouncing around at the 60s, 70s, and then next thing you knew, by the time it was first week in January, from November, in one of the shortest possible times, you'd gone to 556. So that was clearly very, very, very big pump. So just going back to the log scale, because we can't make too much sense when you just have a parabolic hockey stick that distorts everything. Where are we today? This also highlights how far we came down, because essentially the base of that hammer is right the way back down. We went up a lot stronger than we've come down. We've come down in stages. I've kind of drawn a falling wedge there with a quite a sizable pump out. Everyone was back to bull at that point. You could argue that there's been other little squeezes on various dimensions. The question you have to ask, though, now is this: what comes next? And is it another look at? Because if we've looked at Bitcoin specifically in the part 1, we've looked at Bitcoin specifically. What's Bitcoin likely to do? The question also becomes, what's the altcoin? Now, this slightly supports, more likely, I feel, the bull scenario. So I'm still sitting here, bull bear. Are you a bull in a bear's coat? Or are you an out and out bear? And there is the possibility that we have what I call a inverted, HVF method inverted head and shoulders. And if you look at these candles here, so this was a key support zone. And we rallied off of that. By the way, whenever we've had what we call grind lines, you can learn how we use them and what they mean. Ascending grinds, we've broken through them to the downside. Just about every time. We've broken through them to the downside, broken through them to the downside. This is quite a steep ascending grind. You can melt up away from them eventually, but that requires a bull market. So in other words, the buying is coming up under the lows really strongly, and then that's just the beginning of a wave that then pumps it away. But it's usually when you want to grind, eventually you step through. This is a steeper grind, so it could be showing buying. And actually, I would argue that there is buying. There's hammers, hammers, hammers there. So I'm not calling for that to break through. And I am highlighting to you the possibility that in actual fact, this is a inverted head and shoulders. So in other words, we have a neckline. So I'm going to draw this for you now. A neckline on the alt coins. Now, for the altcoins to break up, it would be very tough for Bitcoin to be throwing it down through the 4,000 level. It can't not be. It would be a flippening event though, because clearly something is fatal about Bitcoin that isn't fatal about all the other coins, and Bitcoin's loss is leading to a major run in altcoins. I put that option, we have to consider every potential option, but I put it at a very low percentage. In other words, this overall category needs to be treated like an asset class generally. We're not getting individual stocks pumping against other categories of stocks. It's not that developed a market. Money is either coming into crypto generally, or it's extracting from crypto. If Bitcoin is overall rolling down, this is not universally true all the time on fractals of time frames, but broadly for this bear market, Bitcoin has gone down and the alts have gone down. There's been variations. We've had short periods of alt pumps and Bitcoin being flat or even down for a short while. But in the overall, this is either liquidity in or liquidity out. It's a risk in, risk on, risk off situation. So if we just go and let's put that neckline in there and fatten her up a bit, then you can see kind of where we are at. You had a reasonable hammer. It had a bit of a wick, but it's not hugest of wicks. I like to see a real stake in the ground, a vampire slaying stake in the ground for those final hammers. If this was to be the low that Mike Novogratz might be suggesting is in play for all of crypto. We change this. We're going to just do a bit of targeting here and see, okay, if that was, where do we go to next? It will look like it shortens. That's because of the logarithmic scale on the chart. And let's just get that line as a favorite as well, please. And that would give us a target some way up there of some use. So that would take us from where we are now at the 105 billion market cap for alts to the 145. That's quite a substantial improvement, 45%. So have we done enough of a right shoulder? I would argue we have. So I'm going to say goodbye to all the wedges. Let's drill down and have a look. So this is supporting a bull market for alts potentially. But remember, this is a reversal, not continuation. And as I've said, each time we've had red lines, you've got to have a stab through. So this may not be the shoulder. It's come a long way back and is showing real possibility. Again, on the daily time frame, let's just have it a little bit more zoomed. You can see those are quite decent hammers. I like to see that. That shows an attempt to go down being beaten off, spinning top, and a little bit of a hammer there now. So we are showing some zip to return to what is that neckline, the neckline for an alt possible inverted head and shoulders that is all staked out on a hammer just above the funnel. Now, if you're thinking, this is definitely the case. It's definitely a reversal. There's got to be a pattern. It's returning here. By the way, these can return here and still fail. It can fizzle and then make a new low. So it doesn't mean it has to be. Reversals require a real change in momentum. Be wary. That's why we bias to continuation. But if you're thinking that there's no way we trade through those key support zones that you saw on the funnel that I drew there, these green, red, and dice lines. I just want to show you altcoin number one, which is Ethereum, and many people saying that was the low on Ethereum. And in fact, Ethereum was highly compliant for HVF method. We traded this one. We were in it. We got in on a slightly, we were watching this on a much smaller time frame. We were waiting for one of these. We call this a fractal. And this was a great trade for me, and it set up again after one of its typical Ethereum loss of bids crash downs. This was Coinbase, but I think it did it on a lot of exchanges. You got another wind up, and you ended up going on your 1400 run from in and around 300s, 200s. And I remember the consensus 2016. I was in New York, being part of this run when it was first running from 40s to 80s, right the way up to 160s and beyond. Then it dipped, and then it continued up, and then put in that 400. So it was giddy times for Ethereum. It was all about, wow, this is the platform. And I'm not sure it will ever have that same level of shine, but that doesn't mean it's suddenly become useless and won't make progress either. People tend to lock on a little bit. So it was very compliant. We called this inverted HVF. I remember being mocked for saying at 864 this thing can trade in 400s, and then we repeated again, it'll trade through 400s, and people didn't believe that. That doesn't mean, by the way, we've got everything right. We aren't saying that. This is the compliance to HVF method here. It's been highly compliant on both the upside and the downside, and it did run its funnel, and it did do an inverted HVF and a grind here, and we actually shorted it from there, 285 all the way to 169 with many continuation patterns. That was the working low. Now, if you want to look at this and tell me there's no chance that that goes down again, I'd just like to point you to that line, that line, that line, that line, and that line, and then you can say this time is different. So be very careful in only seeing and locking into one particular view. This, because Ethereum's actually pushing up really quite strong at the moment on a short time frame. I think if I give you a 5-minute look, that's what it's just done. You know, it's just pushed up. In fact, it's only put in that little bit of a shooting star in there. People are getting very giddy about chasing short-term momentum. You need to revisit your big time frame views. And I'm saying to you, that's your 4-hour, that's your daily. How giddy do you want to get about the altcoin market cap? Keep an open mind. The reversal can occur. Ethereum is quite troubled personally with its model and people dumping some of the ICOs. So it doesn't talk for all alts. There are better alts. We've seen Ripple run. It's tough to say that. I've given people Lumen as one to watch in one of our free webinars. On that note, we're doing a free webinar the 3rd of October. I think I've already mentioned it if you've watched part 1, but I mentioned it again in case this is the only clip you're getting. So while we're coming up here, and we can push forward, be aware coins have traded through this, and these grind lines have been broken. However, this time it does have a marginally lower low, support at a funnel. I would say there's a bigger chance for alt to recover, but I'm not sure how far into that Ethereum will be in it. Ethereum can also break away from this line and trade up, but it's a long way from doing the same left shoulder, head, right shoulder. So it's clearly, as the biggest alt, being one of the weakest alts out there in this later stage part of the bear leg. And remember that it's tough for an entire market cap to recover with one of the primary constituents of the market cap in the real doldrums. So just bear that in mind. You're asking this to get bull as well. That said, the others have done quite a bit of pushing up, and Ripple was one of them. So I'll take you past Ripple on a similar time frame. Ripple has been one of the strong ones during this period, but it too, if you go through the full context of the big bull and the big bear, yes, it's a lot higher up off of lows. It's a lot higher up off of lows, and most of that has come recently. But again, it failed on the red line, it failed on the grind line, failed on the grind line, the horizontal grind line. It had a real capitulation fail, and this one can be drawn as well across there. A real fail across there as well. So, you know, it's had a bit of news that's been a driver for it recently. And I would argue that You can't build the entire alt market cap on a single coin. That said, there might be other coins that are also looking pretty good. Okay, so that is the final point to consider in the crypto game. We've looked at BTC in part one, BTC, Bitcoin against the dollar. And we've also looked at the altcoin market cap as a whole, looking at number two, in both the form of Ethereum and in Ripple. I'm not even too sure who's bigger at the moment. They did change sides for a bit. Ripple might have just taken it up top here, but might be back in number three. I don't know. I'll check that later. But the point being, these are the two major drivers in here. I would keep an eye on Lumen. Our premium group has been accumulating. It can't be margin trade on most platforms, not quite liquid enough. So watch liquidity as well with that. Okay, so that's your take. What does it mean? There's a scope and possibility for reversal trade that could see 50% come onto the alt market cap. But this will not mean a full bull. This is not throwing out a huge target. It would, if 45% is massive, actually. You're at 110 and you're going to 145. It's about a 40%. A 40% is massive by any other market. By crypto standards, it's decent. And you would probably be seeing a 20% or a 15% recovery in Bitcoin. It doesn't have quite the same beta. So 15% on where Bitcoin is at 6.5, you're looking at $1,000. So we could see 7.5 maybe on Bitcoin, and your alt could be rolling in the event of this reversal, which would mean Mike in his short-term context of what he's called has actually been accurate and would deserve a lot of credit for making the statement. Remember, however, there's an either way risk to this. Just because you've got two parts of inverted head and shoulders on the alt doesn't mean you get the second. You could smash down here and run through this funnel. I don't see that as hugely likely. There could also be a small element of flipping, although I give that quite a low percent, like 5% out of 1,000. In other words, Bitcoin goes down, but these guys actually go up. I don't think that it's all about the asset category as a whole still. And are cryptos seen in a good light? What's the regulatory environment? That's still the dictating narrative around this. So I think they all march together generally, just the degree varies. And I've always put alts at the higher beta. Do we get a pump out of Bitcoin that is bigger than the altcoins? Maybe at the beginning of bulls, that might happen. So in other words, the statement that if we do 40%, Bitcoin will be doing 15% is inaccurate. Maybe Bitcoin could do a 50 or a 60%. Just not, it's first set up in an HVF. It could be. It could be. So that's a scenario also to consider. So I'm interested in what you think and why you think it. Who's going to run? Which direction are we running? Is this funnel standing? It didn't stand for Ethereum. Is Ethereum's particular case unique? Maybe it was. Is this Ethereum going to drip a little bit lower? If it's dripping a little bit lower, you have a little bit of a problem on your alt market cap. It's one of the biggest constituents. It's just had a push up now, which has been supporting this. Does this grind line break for a deeper right shoulder? Is this enough of a right shoulder? Could we get a deeper right shoulder? Could we revisit the neckline and go deeper, or just go down from here? In other words, it was complex. You called that a shoulder, but then you dipped down. You got a shoulder again, then you dipped down. You got a shoulder again, and then you fell away. It's not always cut and dried technically. Or you could go straight into break from here, and it's on the upside, and you never look through. There's quite a lot of possibilities here, and I'd say actually, when I look at the altcoin market caps, I'm prone to feel slightly bullish, which is a bit of a contradiction to the Bitcoin. So one of them is probably wrong, which probably will revert me back to the assessment on Bitcoin and say, what are you going to do? What are you going to do? Could you be first a dip and then a pump? Or will you go straight into the pump out of this bear channel? It's going to be an interesting question. Tell us what you think. We are coming. The interesting part is we're coming to the decision time. This pink line, this bear flag channel, and being in between this green line over here, this there's lots of green lines. So that one there and the red one there. there's a lot of squeezing and very tight space. And as time is passing, we've got a tip one way or the other. Watch out on the bear side that it can't be just a fake into the short and then a pump. I don't feel that's as likely that it'll be a fake to the bull. If it's a bull, it's going to probably just stay running. So if it's up, that would be my best guess side. If it's down, it could be either of these two, given that we've lost a little bit. So the short side is risky after already taking a 70% decline. But at the same time, you're in the pink descending triangle. And typically descending triangles break down. You might respect that and have the pump and then turn around and reverse, or it turns into first setup in a new trend with this all turning into an upside HVF. So best way, don't commit early. Wait for the market to show you and get in. That's for me. You tell me and share with me what you want to do. Reminder, pre-reg for our trading mini series that'll go out for the second half of November on the link that I'll be attaching below. And on top of that, a free webinar on the 3rd of October, 1930. Not for everybody. We're going to discuss trading, not what you make, it's what you keep. We're also going to look at the 5 M's, the 3 great benefits, and a couple of other interesting, very useful things that will get your trade plan moving forward. There's no way you attend and watch that with a pen and paper, take notes, and don't come out better prepared for being successful as an active investor in cryptos or any other markets, or even as an active trader. So if you apply what you learn there, there's no requirement to engage with us any further. Okay, nice talking to you. I hope you enjoyed this 2-part series. Try to give you the best I've got for where I am. Far from conclusive though, but saying that at some point we will have resolution quite soon. There's a lot of squeezing into a lot of tight spaces that needs resolution, and it will be probably very explosive, and it could be a little tricky with the fake one way go the other way. So watch out. Dangerous times to play. Watch your sizing. Watch getting fills if there's gaps as well. That can also prove very expensive if you get filled a lot higher up and then your originally planned stop. You stand to make a much bigger loss if you get a either way lashing around. So with that, I say goodbye and see you on the webinar. If it suits and it works for you, see you set. We only got 100 places for the free four video micro course that we will be doing. So for all those people that said, oh, I don't have the money to do your program, but I need to grow and throw me a freebie and all of that, I can't do that, but this is for you. Okay, bye for now.